Good morning, Paul Georgie from Allendale. It's December 20th, Friday morning, and Allendale's got the ugly sweater contest going on here today, so please forgive my appearance here this morning. Grain markets are quiet, selling off a little bit from the early session rally that we've seen in soybeans, but wheat market continues to slide. The March wheat contract closed at new contract lows 7 out of the 8 last trading sessions. We opened lower this morning. Markets are oversold. Don't be surprised if we do get some kind of position squaring here today or in the next few days over this very holiday market that gives us some wider volume. So be prepared for that if you're pressing this wheat market to the downside. Some of the reasons for this weakness in wheat is the world supply. We've got plenty of wheat around now in the EU and Russia, Ukraine. South America has even got some wheat that needs to be moved. We had Argentina yesterday raise their wheat production from 8.5 million up to 9 million metric tons. The positive thing that's supporting wheat, if there is such a thing right now, is Argentina has not yet approved the export of about 1.6 million tons of wheat that is destined to go to Brazil. And if they don't get that approved here very soon, Brazil will need to find wheat somewhere else for this January time frame. So that is a supportive factor. Again, the technicals are weak, and we'll have to see how that progresses here going into the end of the week, and then for the next couple weeks when we've got shortened trading sessions. The grain traders in general are in holiday mode. The volume yesterday was respectable, but still light volume compared to a normal trading session that is not around the holidays. So demand for soybeans continued to be the supportive factor in that complex. The logistics problems and concerns out of South America continue to be recycled here as supportive factors. However, the soybean complex is setting near some major report around this 1310 area in the January contract. It's going to be key support in the January. As I said, the March corn contract has support around the 420 area, with resistance up at this 420 or 432 to 435 area in the March contract. Export sales yesterday were good for corn and wheat, sluggish for soybeans. However, when you take the lower than expected sales in soybeans, total them up, we're at 97% of the USDA's estimated export business for the 2013-14 marketing year, compared to a normal rate of about 73% at this time of year. Basis levels at the Gulf are steady. Midwest bean basis yesterday was a little weaker, down about 5 cents in a lot of areas, as the processors have got enough grain around them here through the first of the year, and at that time they're hoping that some tax selling will allow producers to move this grain and be able to meet their needs. Weather in South America, weather in South America is favorable. It remains that way here in the foreseeable future. However, some of the forecasters are trying to twist it a little bit, that we are getting some dryness moving into some areas, and that will be monitored here as we go through the holidays. The comments out of the trade mission in China was that they did discuss GMO. There was no comments further than that by U.S. trade representatives. There's also talk that China may open up its borders to U.S. beef again. That could be positive if they open those doors. It's been 10 years since they have imported beef from the U.S. We've got economic news out here in a few minutes. Third quarter GDP estimates will be watched closely. We did get the housing starts yesterday, or housing sales, and they were at a decline for the third straight month. The cattle on feed report out this afternoon, looking for on feed at 95.4%, placed at 100.4%, marketing's at 96.7%. The placement number at over 100%. Remember, they were up against some placements that were very low because of the high corn prices a year ago. Cutout values continue to weigh on the cattle futures markets. Choice was down 47 cents yesterday. Select up 40 cents. CME index for the feeder cattle was lower also at 166.90. And pork cutout values fell sharply at $2.59. So a lot of things happening here and adjusting before the weekend, and expect some very light trade next week as the markets will be closing early on Tuesday, closed on Wednesday, and then reopening on Thursday morning for both livestock and grain futures. Everyone at Allendale would like to wish all of our customers, readers, friends a very safe and happy holiday, and we will be updating next week, but certainly on a limited basis. So have a great trading day, and we'll hope to see you next week. Thank you.